I'm shooting this video because I wanted to answer 3 separate questions. The first question is, does the opening range breakout strategy, which is an institutional grade entry model, does it work for crypto? Number 1. Number 2, does it work for every single session? Meaning, does it work for the Tokyo Open? Does it work for London's Open? And does it work for New York's Open? Number 3, how long should I hold on for is the most important one, right? What is the best risk to reward? Am I doing 3 to 1 risk to reward, 4, 5 to 1, 6 to 1? Which one is the one that happens most commonly? So I wanted to find this out, and so these are the questions that I wanted to answer by doing 30 days of back testing in the month of March. So I wanted to show you guys the results at the end. I have a great hypothetical to show you how much you would make, as well as a bunch of pie charts and Excel spreadsheets to show you some of the data that I gathered, and I think you guys will find it very interesting. So with all that being said, I need to teach you what the opening range breakout actually is. If you are new to this, I'm going to spend a couple minutes explaining this for those of you that aren't aware of it. For the rest of you guys, hang tight because the end of the video will shock you. So for that matter, the opening range breakout is an entry model that starts at the beginning of each stock exchange. And so for this specific video, I'm going to use the London Stock Exchange, which opens at 3 a.m. Pacific Standard Time. So the first thing you're going to do is you're going to go to 3 o'clock, right? If you look at the bottom of the screen, you can see it's 3 o'clock. And I'm using March 31st as this example. So you're going to go to the 5-minute time frame to look for the first 5-minute candle. And this is the candle that I use, the range. Some people use 15, some people use the 30-minute candle. I've got the back data for the 5-minute candle, so I'm just gonna stick with that one. So if you go to 3 o'clock and you find that candle, which happens to be this little tiny guy right here, what you want to do is you want to box it out. You can do it with 2 separate lines. You can do it with the rectangle box like I'm using right now. But first find that 3 o'clock candle, which happens to be this little tiny doji candle right here. Now once you have boxed out the first 5-minute candle, then you're gonna go down, and as soon as the next candle prints, which is this one here, you're going to go to the 1 minute. You're gonna go to the 1 minute time frame. As soon as the second candle on at 3 o'clock starts up, so I guess 3:05 would be the time to switch over to the 1 minute, so you can see what's happening with a little bit more detail. So what you're looking for is which way price is going to break. And on this particular day, it broke down, meaning it broke the first 5-minute candle bottom instead of breaking the top range, right? So since it broke the bottom, and oftentimes there is a fake out, there can be a manipulation, but more often than not, once price breaks a specific line, right, whether it's above or below, then what you're looking for is a retest of a fair value gap or trend line, right? That's what you want to enter this specific trade. Now you could have entered here, right? But if you're waiting for a retest, there was none. There was no retest here. And some people enter without a retest because that happens often. There's no retest. But I find this the safest, most reliable way to be sure that the price is going to head in your direction is to wait for a retest, right? And so it came back right here, retested, went inside a little bit. Sometimes it just comes and taps the line. Sometimes it'll scare you and go inside. But as you can see, it came back and retested, and then it went and dropped quite significantly. And so we had a nice short move here. And so what I do is then I grab a short position and then I measure using my stop loss as the multiple, right? The stop loss is 1, okay? So if you're unaware of using this tool, you're basically creating 1. Whatever 1 is this range, okay? So for me, let's just say this is $1,000, right? So this is $1,000. If it goes this way, it hits your stop loss, you lose $1,000, right? But it goes in the way of your trade, if you guess correctly, if you're using this entry model, it makes it a little easier, then you would have gone short and you would have made whatever that is, 21 times 1,000 in this hypothetical. So that's a $21,000 trade if you went that big, right? If you were willing to risk $1,000, right? Or if you're willing to risk $100, then that's $2,100 multiples, right? So that's how you would use this particular entry model. You're waiting for one place to break, come back, retest, enter as soon as you see it's coming and it's leaving again, then for sure you know that price is going to be heading in that direction. You could have entered here, put your stop loss on the opposite side of the range, which is what you're supposed to do with this entry model, and then wait, right? Now, what is the average risk to reward? How long should you hold? Okay, these are questions that I wanted to answer This was a great trade. This was a big day. I remember this day, but not all days are like this. And so I needed to find out what was common, right? And now that we have somewhat of a semblance, now this doesn't work out so perfectly. There's little nuances to all of this stuff. That's why it's important to gather a lot of information. Look at all my videos, come join my groups. We talk about this in detail and how to enter this specific trade. But for the most part, if you know the basics, you should be okay. So these are the things that I tracked, right? Overall effectiveness. Did it actually work if you follow the steps? Risk to reward. How long should I hold? Retest. What kind of retest was it? Did it come back and retest just the line? Did it retest and fill a gap? So if we come back to the 5-minute time frame, you will see there's a gap, right? This candle and this candle do not intersect, so it leaves this big gap here. And so that gap essentially got filled while the trend line was also retested. Sometimes it just comes in and fills the gap, but doesn't come touch the line. Sometimes it leaves without actually retesting at all. So I wanted to know what kind of retest was the most common. Was it just trend line alone, fair value gap alone, no retest, fair value gap plus the trend line? So I want to know which one of those retests were the most common. And then of course, how often was my stop loss hit, which is almost the same thing as effectiveness. And then manipulation before the breakout. Was there a manipulation, meaning they fake you out and come to the opposite direction and go in the opposite? So they faked you out and then ended up where the big move was a short, not a long. That happens every once in a while as well. And I wanted to track how often does price fake one way and go another. Those were all the metrics that I was looking for, and those are the important ones in my opinion. Okay, so here are some of the numbers that I compiled, and it's a little bit tighter here in these little pie charts, a little more visually appealing. So here are the effectiveness, right? Guys, this is a monster month for this particular trade for London sessions. The London session, I think, had the best out of all three of them, and I'll show you why. Stop loss and effectiveness, same thing, right? So 11% of the time it came back to hit my stop loss after I entered. So for manipulations, I want to show you guys visual understanding of what that looks like. So on this day, this was the 5-minute candle, a little bit bigger than that little doji that we just looked at, but this is the big move, right? You can see it came down, it retested the line, the trend line, before it took off. But this is where it manipulated, faked out like it was gonna go and break and go long, right? But it didn't. It came back down, and then you see the clear retest here before it comes down, and that's what you're looking for, right? That's the entry secret, right? You need to see this before that, right? So how often do we get a manipulation before the actual big move? And you can see that it happens often, right? It happens about 66% of the time, 70%. So you always got to realize that that first move, it could just be a fake out. So just realize that. Then round trip, like, does price actually come back after we get the big expansion, after our big move? And this move was huge, right? This move, I believe, was like a 20-to-1 move, right? There's another big move. So London had some big moves in the month of March, but sometimes price comes back and does a full round trip. And so how often does that happen? And that's important to me because I want to know, can I make money on the way back? If it happens every single time, or you have a high percentage, after you make that huge move, you can come back and potentially make the same on the way back. And how often does that happen? So it happens about 50% of the time. So it's not really the best, right? So 50-50 coin toss is not what you're looking for in any kind of data, right? And then the most important metric was the risk reward. How long should I hold? Which is the most advantageous one to hold for the London session? And I almost want to say the month of March was probably exceptional for London. I don't know. I only have a couple months of back data. February wasn't full, so I can't give you a full take on February, but March looks insane. And too bad it's too early for me because I can't trade the London because it's about 3 a.m. Pacific Standard Time. I think I got 2 sessions in because I was just up early this month for 2 of those days. So I traded it and it was good. So the London session looks like, for the ORB strategy, the London session almost looks like the best session to do this particular strategy for, although all 3 did very well. 6 to 7R seems to be the one for March. I don't know if I would hold on to 6 to 7R every single time, but it looked like the one that won and took the prize for this particular month. I would say that's probably an outlier, but still very encouraging nonetheless. Trendline by itself, it came back and touched trendline about 22% of the time. Fair value gap plus trendline seems to be the most common for the London session. And then no retest about 11% of the time. Fair value gap by itself 22% of the time. So it always comes back to retest something, whether it's fair value gap by itself or trend line by itself, or the combination of them. It will come back and test one of those. So just be aware that more often than not, it's going to come back and retest before it does the big move. And I think that is something that is the one thing that you have to master to get good at this particular strategy, is looking for that retest and knowing also whether it's manipulation or not. You can use your other indicators and other factors to find confluence for this and for this. Now, I did run a hypothetical like I did for the other ones, and I want to show you that as well. So same thing, if my stop loss was $100, if this was $100 here, if it came and hit my stop loss, it would be negative 100. And then everything in the direction of the trade was plus 100. So this is the multiple, and that's how I gauged it using the risk reward tool. And so these are the numbers that I got on the hypothetical. You can see here we got 1 hour risk to reward. It won 28 times, lost 3 times, 90% win rate, $2,500 if you were to run and just hold for one multiple, right? If you're just to hold for one multiple, and if you don't know the numbers here, right? So this is we're 3 to 1 there. So one multiple is like right there, right? So how often did it go one multiple before it came back and hit the stop loss? Most of the time it did hit that multiple, 28 times, and only 3 times did it come back before it hit one. And how many times did it hit two? 2 times, right? That's 2. How often did I get 2 to 1 risk reward on this trade? And 28 times, same thing. 3 times it came back, 90%, except for you get paid a little bit more, right? Because you're holding twice as long, $5,300. Wow, great numbers for London. 3R, 27 times it got to 3R and came back to the stop loss before it got to 3R 4 times. So 87% of the time, you at least get 3 times your risk, what you're risking, whether it's $1,000 or $100, right? Oh, win rate was 77% on 4R. So these numbers are insane, guys. For risking just $100, if you were to do this trade 30 days, this is what you would be making. But the winners were 5 and 6R, which were exactly the same. 21 wins, 10 losses, 67%, 65 or $9,500. 18 wins, 13 losses, 58%, 95. So same thing. And then it just got worse over time, right? Holding longer was less advantageous, but still, even holding for those multiples is more advantageous than holding for those little amounts. So there's some lessons to be learned here, but good information to take with you. And if you guys really want to dial in this trade and really understand it at its most granular detailed level, I am doing this. Okay, there's nobody going this deep, nobody taking this as serious as I am. And once it's all said and done, I will have the most back data for cryptocurrency in this particular trade, which is a popular trade. It's been around for decades. But I think that with crypto, it has risk to rewards when it comes to a much more volatile asset. So I hope you guys gathered something for this. I will continue to pump out videos on this topic. So do me a favor, like the video, subscribe, comment, share. I need to get this information out, guys. So I will see you guys in the next video. Take care. Have a great rest of your weekend.